Welcome. I mean, I'm always shocked to see so many people turn out. And of course, you probably don't know everyone that's here, but there's a lot of you and you're all over the world. And it makes me happy to know that you're here to take control of your finances, right? Take control of your US tax obligation that you have, that I have, because I'm also American and also an expat. And a little bit about that. I'm from California, now based in Vienna, Austria. So shout out to all the folks that are in Vienna or even our neighboring country. So Germany's pretty close, right? And my background's in finance and information technology. That's kind of what brought me to create MyExpat Taxes. I was frustrated with my own situation. There was no good tax software to use at the time. I went to a couple different firms. They were trying to charge me in the thousands, right? Just to file one simple tax return, and it just didn't make any sense to me. And that's really what brought us to create MyExpat Taxes. And that's, we've been here for a while now. We're now the leading US expat tax software. And it's quite amazing to see the community we've built. I mean, just look at the chat, right? There's so many of you guys, and we're all united over taxes, which is funny, but true. So that's me. That's why I'm here. I hope you're excited to learn about, the new tax changes for this year. And, in general, just learn a little bit more about US expat taxes. So what is on today's agenda? Well, what we're going to first talk about is what refunds US expats are eligible for, because that's probably the craziest thing that's happened in the past few years. I mean, okay, the pandemic was probably the craziest thing, but because of the pandemic, there's been a lot of, rewards in terms of financial payments from the IRS and things that US expats are eligible for. So if you're sitting there and you're nervous about filing US taxes because you think you're going to be owing a lot of money, you might be in for a nice surprise and actually be getting a refund instead. So that's what we'll cover first, and then we'll go into kind of how, when, and what to file, right? So basically Expat Tax 101, if you've never filed, how you can catch up through the streamlined procedure, and in general, kind of FBAR, FATCA, what that all means, and what do you have to do in addition to your normal federal tax filing. So I did see a couple questions pop up in the chat. Just make sure if you have a question, put it in the questions section. Ellen will try to copy and paste your questions and put it in the questions section if you actually put it in chat, but the best way to get your questions answered is to put it in the questions tab. So without further ado, I have to talk a little bit more about my expat taxes, of course, but I promise you after that, we'll get into the juicy stuff. So my expat taxes is really a great way to do your US expat taxes. You go in, you can file in as little as 15 minutes if you have a simple situation. If you don't have a simple situation, if you want to talk to a tax professional, you can easily upgrade in order to have someone review your return, review your input, right? Or you can even go one step further to ask a tax professional to get on a video call with you and talk to you about your personal situation and what's the best way to file. And you can be rest assured that you'll never miss out on a refund or a tax treaty benefit, because we built that all in our software to optimize your return in the best way possible based on your information, right? And then on top of that, we'll always e-file your return if we can, and we can e-file 99% of returns. And I know that that was something that really bothered me as an expat, is that if I used any other US-based tax software or a tax firm even that was claiming to do expat taxes, they would tell me to paper mail my return because I was married to a non-US citizen spouse, which just drove me insane because I don't want to send mail, right, to the US when I don't have to. So we can e-file returns if the IRS allows us. And so that allows us to e-file up to 99% of expat tax returns. Alrighty, refunds. So the first and most common refund for everyone here, right, are the stimulus payments. And I'm sure you've heard about the stimulus payments or something called the economic impact payments or something called the recovery rebate credit. It's all under the same umbrella. And I'll repeat myself because if you've been in any other webinar or, basically you haven't been hiding under a rock, you probably know that there were some refunds going around. So basically it's broken down into 3 different rounds. The first round was $1,200 per taxpayer plus $500 per qualifying dependent. The second round was $600 per taxpayer plus $600 per qualifying dependent. And that's kind of the key thing there is qualifying dependent. There were some age requirements that you had to meet, but the third round was $1,400 per taxpayer and $1,400 per dependent. So regardless of age, if they were a dependent on your return, you can get $1,400 for them. So what did you need to be qualified for these refunds? Well, basically there were 3 checks. So the first check is, do you have a valid social security number? And that is probably more relevant for accidental Americans. So, those folks out there, and I'm sure there's a few here that are joining, that maybe your parents are US citizens, you've never been to the US yourself, and now you have US citizenship and you're told that you have to file a tax return. Keep in mind, you have to file a tax return if you have US citizenship. But in order to file a tax return, you'll need a social security number that you don't automatically get at birth, right? So you may have to apply for a social security number. We'll talk about that a little bit later. But essentially, you need a valid US social security number, right? So the IRS needs to know who you are. And then you cannot be claimed as a dependent on another US tax return. So key thing here is US tax return, right? If you're claimed as dependent on your local taxes, right, a German or Canadian return, that's fine as long as you're not claimed as a dependent on another US taxpayer's US tax return. And then on top of that, if you are considered a high earner, and I'll talk about the income thresholds a little bit later, you might have a reduced payment or no payment at all. But there are ways to kind of reduce your income artificially, so to say, with the foreign earned income exclusion. Again, I'll kind of get into that in order to qualify for these refunds. Now that you know how much the refunds are and you know what you need to be eligible for the refunds, you're probably sitting there going, hey, I'm eligible, but I never got any of this money. How do I actually get it? Well, you have to file a tax return because the IRS can't pay you unless they know how much money you make and that you qualify for these refunds and where to pay you. So in order to claim the refunds, you will have to either file or amend a 2020 tax return if you want round 1 or round 2, right? And I say amend because if you filed a 2020 return, but you didn't get the stimulus payments, you'll have to amend that 2020 tax return to claim that you did not get those payments. So at this point, the IRS is looking at you to claim the amounts that you're entitled to. They're no longer paying out based on who they think is eligible. You have to ask for it at this point. Now, for round 3, that's a bit different because you have to file a 2021 tax return. And keeping in mind, we always file the tax return after the year has passed. So now we're in calendar year 2022, filing our 2021 tax return. So again, if you want round 1 or round 2, you'll have to file or amend your 2020 tax return to claim those missing amounts. And you'll see that on your tax return. It's called the recovery rebate credit. And then for your 2021 tax return, you'll also see a similar term called the recovery rebate credit. That's the stimulus payments. Everything's under that same umbrella. So again, if you take anything away from this, it's stimulus payments, economic impact payments, and recovery rebate credit, all the same thing. So that is the first bucket of refunds that essentially everyone is eligible for as long as you have a valid social security number and you're not claimed as a dependent on another person's tax return, and assuming that your income is not too high. So the next bucket of refunds is not necessarily due to the pandemic, right? It's actually an ongoing refund that expats have always been eligible for. So it's the child tax refunds, and it's a child tax credit. Sometimes it's called the additional child tax credit. Sometimes it's called the refundable tax credit. We just call it child tax credit refunds. That's kind of the easiest way to phrase them. But how much are those refunds? So 2018 to 2020, you would be expecting $1,400 per qualifying dependent under the age of 17. And then for the tax year 2021, it's between $1,400 to $3,600 per qualifying dependent under age 18. So yeah, there is a little bit differences with age, which obviously can, make a huge difference on your tax return. And keeping in mind, the way age is calculated is on the last day of that tax year. So if you're thinking if your dependent was under the age of 18 for your 2021 tax year, think about how old were they on December 31st, 2021. So how are you eligible for these refunds? You're probably thinking, I've never even heard of these. Well, the first thing is, you need to have more than $2,500 of earned income. Earned income is the key word here because that's basically salaried income or self-employment income. A couple things to note is that if you have self-employment income and you use the totalization treaty, it might not work in your favor because then the IRS doesn't necessarily count that as earned income for the purposes of claiming the child tax credit. Now, the next level of that is you cannot use the foreign earned income exclusion. So that's Form 2555. So if you're out there, you're a parent, you've been claiming your children on your tax return, they're under, 17 or 18 for the relevant year, and you're saying, "Hey, but I never got a refund." Take a look at your tax return. You probably have Form 2555 in there. And if that's the case, then you cannot get this refund. You can only get it if you don't have that form included. But that's something we will talk about a little bit later as well. But you don't have to use the foreign earned income exclusion. There are other ways to reduce your tax bill so that you're eligible for the child tax credit refunds. Now, going further, what does your child need, right? Because it's you being eligible and then your child being a qualifying dependent. So a qualifying dependent for the IRS is a child that has a valid US Social Security number by the due date of your return and obviously under the age threshold. Now, I say they need a Social Security number by the due date of your return because that is the key phrase, that even if in 2021, you had a new child or you just never got Social Security numbers for your children, and you're kind of kicking yourself right now going, but I don't have a Social Security number, it's too late. It's not too late for your 2021 tax return. Your 2021 tax return is due on June 15th, but you can get an extension until October 17th. And that means that you have until October 17th of this year to get a valid US Social Security number for your child to claim the child tax credit refund and claim that $1,400 stimulus payment for your child as well. So there is quite some money on the line. And something else I want to call out is I've seen a lot of people go, well, I don't want to get a US Social Security number for my child because I don't want them to be subject to filing US taxes later on. I'm so sorry to break it to you, but the second you gave them that US passport, you gave them US citizenship, you already put them in that bucket of having to file taxes. But if you don't get them a US Social Security number, one, you don't get these refunds, right? Two, you make it a little bit harder for them because one day they're going to find out that they have to file US taxes. And then they're going to be scrambling on how to get a Social Security number. And it's a lot harder the older you are, right, to get a Social Security number because it's pretty standard process to give a Social Security number to a child. But when you're older, you're going to have to go there in person. You're going to have to go through a lot more procedures in order to get it. So if you have children, you should just get them a US Social Security number. That's not what makes them file US tax returns later on. That citizenship you gave them already is what makes them have to file US taxes. So regardless, how do you claim the refunds? Well, if you've never filed, you can file under the Streamline procedure, which I'll talk about a little bit later on. If you've already been filing and you're saying, hey, but I never got these refunds, what's going on? Well, you'll probably have to amend your prior year tax returns to revoke the foreign earned income exclusion. So this Form 2555, switch over to the foreign tax credit, and then making sure that you claim your children as dependents. I'm sure that sounded like gibberish, so we'll walk through that process. But I think the main thing here is if you're wondering if you're eligible for these refunds and you're not sure, you can always send us an email. I kid you not, I'll have the email at the end, but you can send us an email. Just create an account, upload your prior year tax returns. We're happy to review them for free and just give you, a heads up, hey, you are eligible, or actually, no, based on your prior year tax return, you're not eligible. There's nothing to amend. So that option's always there, and you can amend back to 2018 at this point. So something to think about. Now, there's always some fine print, right? And this is the fine print of the refunds. So as I mentioned, there are income thresholds. So, I won't read them all out because you can obviously see the screen. And the main thing is there are two different thresholds for the stimulus payments and the refundable child tax credit payments. So for the stimulus payments, the thresholds are not terribly high, right? So if you're single or married filing separately, that's 75,000 US dollars. But like I said, you can use the foreign earned income exclusion. So for example, if you are in Germany, you're earning 100,000 US dollars equivalent on your tax return, you can use the foreign earned income exclusion to get you down to exclude that 100,000 US dollars and then get you down to zero adjusted gross income. And then that would make you eligible for the stimulus payments. But obviously you have to weigh that against if you do have children, right? Does it make sense to use the foreign earned income exclusion to lower your AAG? Or should you not use the foreign earned income exclusion to make sure that you're eligible for the child tax credit payments, which are ongoing every single year and not kind of a one-time payment? So I'm sure that sounds like a lot. And, that's what MyExpatTaxes is here for, to figure out what's the optimal approach for you based on the year you're filing, right? But those are things you have to think about. Is there is strategy involved in filing a US tax return. And it's not just, okay, I have to file this to tell the IRS about my situation. No, it's something you should think that there's strategy involved to figure out the best way to file my US taxes in a way where, I can get the refunds I'm eligible for. I can contribute to my US individual retirement accounts if I want. I can potentially, add credits to my US Social Security benefits account if I want. So there's a lot of things you can do with the US tax return, and it's not really just filing it to file it. It is something you should consider as a financial tool that you are able to use. Now, regardless, there's a couple other things, because I'm kind of trailing off now, a couple other things about the refunds. So for the refundable child tax credit payments, there is a new question that says, did you have a main home in the US for more than half of 2021? So this is only relevant for tax year 2021. And that's because in tax year 2021, the refundable child tax credit is between $1,400 up to $3,600 per child. And if you had a main home in the US and, take a look at the screen, if you were abroad due to a temporary reason, you might still be considered to have a main home in the US. What does that really mean? Well, the IRS defines temporary reasons as sickness, vacation, business, or being stationed abroad, because you're US military. So again, if you believe that you're abroad due to a temporary reason, you can still be considered to have a main home in the US. So kind of the way I describe it is you're on a short-term contract for work, you have to go abroad for 6 months or something, right? That is essentially a temporary reason because you're going abroad for a very short-term contract. You still believe that your main home is in the US. You're going to return to the US, right? You still have bank accounts in the US. You still have a mailing address in the US. In that situation, you are still considered to have a main home in the US. So that is something definitely to think about if it's applicable to your tax return in terms of the child tax credits. But essentially, if you did have a main home in the US for more than half of 2021, then you're eligible for $3,600 per qualifying dependent under the age of 6. And then if they're over 6 but under 18, it's $3,000 per qualifying dependent. So that's a lot of money, right? Now, if you definitely did not have a main home in the US, right? So you're like me, you definitely live abroad. I have a house in Austria. All my work is in Austria. I have a family in Austria. I don't plan on returning to the US. Then you fall in the other bucket where you get, $1,400 per qualifying dependent per usual. And yeah, it's not $3,600, but it's still $1,400 for a refund you probably didn't think you were even eligible for. So that's kind of the fine print of the refunds. So something to keep in mind. And now we'll skip more into the basics, so to say. So who even needs to file, right? Well, all US citizens or US green card holders that pass the filing requirements. So you'll see the filing requirements on the screen. I won't read them out. Obviously, you can see them. It's different depending on your filing status. Now, what I want to call out is that's not a typo on the screen, and I say this every single time because it still is crazy to me. But if you're married filing separately, your threshold is $5. If you make over $5 US, you have to file a tax return, right? Kind of crazy, but that's just the way it is. And what does married filing separately mean? I mean, that's essentially any single person that is married to a non-US citizen and they don't want to put their non-US citizen spouse on their tax return. Most likely you're going to be married filing separately unless you qualify for head of household. So something to keep in mind, a lot of expats will have this filing status and you have to file a tax return if you make over $5. Now, let's dig into that a bit deeper because what does it mean to earn over these filing thresholds, right? Well, it's your worldwide income that's considered when you're calculating gross income. It's not just US source income. So even if you have US source income, even if you don't, it doesn't matter. It's your worldwide income. So you're in Canada, you work in Canada, you're paid from a Canadian company, Canadian employer into your Canadian bank account in Canadian dollars. You have to convert that to USD because that's your worldwide income. So it's all income earned anywhere. Now, let's bring that even back a notch more, where what does it mean to have income, right? I mean, it's obvious when you're salaried or you're self-employed, you're earning income, but what if you're getting, certain tax payments or government payments from the country you live in, right? Or you make Social Security and you have pension distributions, or you're getting unemployment money or anything like that. Keep in mind that's still included in gross income, right? So if you're getting pension income or other types of income that's not necessarily salary or self-employment or rental income or investment income, that's all in there. If you basically get money into your bank account in one way, shape, or form from any source, it's included in gross income. So that's what you have to consider when you're thinking about, do you need to file a US tax return? Now, even if you don't meet the filing requirements, you do have to file a tax return in order to claim your refunds. So that's kind of why I talk about the refunds first. So if you're sitting here going, oh, well, I don't meet them, but if you want the stimulus payments, if you want those refunds, you will have to file a tax return in order to get them. So just a heads up there. And I get this question a lot. You have children abroad, or you're a little bit older and you're saying, well, how does age factor into this? Well, age doesn't factor into it too much, right? Because again, if you meet these filing thresholds, right? If you're 10 and you make over $12,550, you have to file a US tax return on your own, right? And if you are 65 plus, the thresholds are a little bit increased by a couple thousand, but not a huge difference. So age isn't a huge factor, but I will call out that if you do have dependents and they do have unearned income over $1,100, that's when you need to check it out a little bit more, because you'll either have to include their unearned income on your tax return, or they might even have to file their own tax return. So just heads up there, that's the only kind of fine print for dependents and their own tax returns. So now if you're sitting there and you're kind of nervous saying, oh my God, I should have been filing a tax return for the past 20 years. The IRS is going to get me, they're going to throw me in jail. They're not. No matter what anyone tries to scare you out on the internet or whatever you see, the IRS is probably not going to be knocking on your door trying to throw you into jail, right? But what they will offer is the streamlined procedure. So if you have this weight on your shoulders and you're nervous, I do recommend to go through the streamlined procedure and catch up with your taxes. And that is essentially an amnesty program that the IRS offers, where you can file only 3 back years, right? And that's 2018 to 2020 for now, plus 6 back years of FBARs. And even if you haven't filed for over 10 years, it doesn't matter. You only have to file these 3 back years, and then you will be deemed as caught up. So again, the IRS is not going to knock down your door. They're not going to force you to file at this moment. But obviously, as technology increases, as data, is shared, because they do know where we are, right? When you go and you open a new bank account, you have to sign up. You have to give that foreign bank your US Social Security number. You are somewhere in a database. And right now, the IRS is not really tying it out. But one day they might. And you just don't want to be on that, on that side when they do that. So I would recommend, if you haven't filed, if you're nervous about it, go through the streamlined procedure. We do offer on MyExpatTaxes for a fraction of what any other firm charges, and you can do it all on your own time, and we do make it as easy as possible. But you don't have to worry about the past 20 years, the past 10 years. It's only the past 3 years. File those, you're all caught up. I will call out that streamlined returns have to be paper mail. So that's the one instance we cannot e-file your tax return, right? Because they have to be paper mailed. It's an IRS mandate because they need your original signature on it. But with that being said, once you do streamline, you should still file your current year tax return, obviously, to claim stimulus round 3. And that can be e-filed, and then that will be e-filed via MyExpatTaxes, and then you'll get, a lot faster processing. Because when you go through the streamline procedure, because you have to paper mail it, don't expect the IRS to get back to you for probably 6 months to a year, if they ever do, right? The IRS only reaches out if there's bad news. They don't really reach out if there's good news, right? Only in terms of sending you a check or a direct deposit for refunds. But otherwise, kind of ranting here, but again, if you're nervous out there, you haven't been filing your taxes, or you've been filing your taxes in a way that you've been missing some very key important forms, like for example, you have a foreign corporation, or you had a foreign trust or pension, and you're missing some very important forms, you can go through the streamlined procedure and only do the 3 back years and 6 back years of FBARs, and that will wipe your slate clean, assuming that the IRS is not on you about some other previous tax year. So That is streamlining. Now, what are the actual tax filing deadlines? Because they, I think at this point they change every year since the pandemic. But the main thing is it's normally April 15th. If April 15th falls on a holiday like it does this year, right? So it falls on Good Friday this year, it will be moved to the next Monday. So this year it's April 18th. And if you owe taxes, that is an important deadline for you because even as an expat, and expats always get an automatic 2-month extension, which is why we say it's June 15th for filing, but April 18th for payments because it's a chicken and egg situation. Taxes are due April 18th. If you don't think you owe taxes, you can wait until June 15th to file your tax return. If you think you owe taxes, you should at least make a payment, an estimated payment by April 18th to prevent interest or any other fees from accruing. And this year is a little bit different because, you know, those child tax credits I talked about earlier. If you did get advance payments of the child tax credit and you got too many advance payments, you do have to pay it back. So that is something that I will have to do myself this year. So my situation, little personal story, I welcomed my daughter back in 2020. And, you know, I then filed my tax return, obviously got my stimulus payments, got the child tax credits, but then they also gave me advanced child tax credits of $1,800. But like I said, I live abroad. I don't have a main home in the US. So I'm only eligible for $1,400 of that child tax credit. So on my tax return this year, I will actually have to pay back that $400 difference. So again, if that situation sounds similar, file by April 18th to prevent any interest or any other fees from accruing. Otherwise, June 15th is your normal filing deadline, and you can always file an extension by June 15th to get an extension till October 17th to file your tax return. So for those that need to get social security numbers for themselves or their children or get any other things kind of in order, go ahead and file an extension. I know it's actually not so easy to file an extension. You would think it should be, but we make it very easy. Once we open up the filing extensions, everyone will get an email to go ahead and file an extension. We actually pretty much make everyone file an extension once we hit March, just to be on the safe side. But we will make it very easy to file an extension online for free. Otherwise, if you wanted to do it a little bit more the old-fashioned way, you can always print out Form 4868 and send that in via mail, or you can just go to irs.gov/payments and make a $1 extension payment, and that will also get you an extension. So just heads up, there's a couple different ways to do that. But MyExpat Taxes, we will make it transparent and easy to file an extension because I know that's not always the case with other US tax softwares. Now, again, if you have back taxes, you should file them ASAP. If it's streamlining, you know, go through the streamlining procedure as soon as possible to just get that out of the way. And obviously, if it's not streamlining, but you didn't do your 2020 taxes, your 2019, then you should do that sooner than later because if you do owe tax and every single day, you know, interest and other fees are accruing. So those are the tax filing deadlines. I hope you're not too overwhelmed yet, because now we get into the juicy parts of this. Probably you won't think it's so interesting, but it's definitely interesting for me. We continue. What are the US expat tax forms you should see on your tax return? So as you get a tax return, which is probably going to be, thanks for the laughing emojis. I realize I'm being a little silly as well. Anyways, what are the forms you should see in your tax package, right? Because obviously you're going to see something that's like 50 to 100, sometimes 200 pages long, depending on what you got in your situation. And you should be able to read it, right? You should know what is actually important information. So the most important forms you have is obviously Form 1040. Consider that your overview form, your summary sheet, basically a nice summary to the IRS. This is how much I make. This is the deductions I'm taking. This is the credits I'm taking. This is the tax I owe. This is the refund I get, et cetera, et cetera. So that's the overview form. You're going to see 1040 Schedule 1 and 2 and 3. And this year it's like blown out of proportion. They're so long. But that's just basically adding to Form 1040. Okay, a little funny story there because I have to tell it because it's wild to me how they did this. I don't know if anyone remembers, but in a certain US presidential campaign, someone decided to say that they're going to make the US tax return the size of a postcard. And then this person got elected. And then the next year, they literally took the 2018 tax return and cut it in half. So it was the size of a postcard. But when they cut it in half, that just meant that there was a second page with the other half, right? So it's like you see literally a page that's like If you see your 2018 return, we get this question all the time that they think that we are missing half the page. We're not missing half the page. They literally made, they cut it in half by just wasting paper, and then a form that was originally 2 pages long, they cut in half and then added 6 additional pages to it. And then they realized how silly they were, so they pulled back. The next year in 2019, they turned those 6 additional pages to 3 additional pages, which is the Schedule 1 to Schedule 3. And then I don't know what went into their mind this year, but when you see your 2021 tax return, they have expanded those 3 additional pages to be like 2 to 3 pages long, each of them. So you're in for a wild ride when you see your 2021 tax return. It's not us trying to make it longer, it's just the IRS. Okay, I continue. So that is Form 1040. That's the craziestness of it, and it's just the way it is, but that's your overview form. Now, if you're claiming a child, right, you're going to see Schedule 88112 in there, and that is, basically the form to claim any child tax credits. A little kicker for those that are used to this form, they have also blown this form out of proportion. It used to be, I think, like 1 page, right? Now it's 3 pages. There's a bunch of different sections and if, ands, and buts or whatever in there. That's just what the IRS does, right? It makes it a little bit more complicated. So if you're used to filling out this schedule yourself, especially, you have some reading to do this year. But obviously through MyExpatTaxes, we'll make it as easy as possible for you, so you don't even have to look at the form until it's all filled in for you. Regardless, if you're claiming the foreign earned income exclusion, you'll see Form 2555 in there, right? That's a very common form that you'll see. And if you're filing for foreign tax credits, you'll see Form 1116 in there. So that is to claim foreign income taxes paid. Now, a big myth here, people think that you cannot claim the foreign earned income exclusion and foreign tax credits at the same time. That's absolutely not true. You can definitely claim both of them at the same time, right? Sometimes it makes sense to claim only the foreign earned income exclusion. Sometimes it makes sense to only claim the foreign tax credits. Sometimes it makes sense to claim both. So it is not surprising to see both in your tax package, especially for the foreign tax credit, is to track how many foreign tax credits you have. So if you ever decide to amend your tax return, it's going to make everyone's life easier because you know exactly how many foreign taxes you pay. So there's also Form 8833, and that's for tax treaty benefits. So if you have some type of government payment, right? So, family benefits that you get from your country or certain Social Security payments that you get from your local country, it'll be pretty common that you'll see a tax treaty benefit in there. So if you go through MyExpatTaxes, we'll figure out whatever tax treaty benefit applies to your situation and just pretty much stick it in there. And, if you have a foreign pension, which I'm sure pretty much everyone does, right? For certain countries, pension contributions are excludable via tax treaty. So if that's eligible for you, we'll also stick in that tax treaty benefit for you. So those are the major forms, right? That are expat related forms. Obviously there's, a million other forms that you might see, but these are the main ones for an expat. So when you look at your return, these are kind of the ones to look over. Now, what are the actual expat tax benefits? Well, there are essentially 3 of them, like I said, right? And the first one is the foreign earned income exclusion. So, 2555, foreign earned income exclusion, FEIE, all the same thing, right? Don't get confused. And basically, you just think about it as excluding around 100K of your foreign earned income from US taxation. So that amount obviously goes up every single year due to inflation. We're at about 109K this year, so 108K 700, but it just continues to go up a little bit, but about 100K. You can always exclude even more if you have certain housing expenses. But regardless, it's a pretty easy form to fill out, right? It's pretty straightforward, especially if you've lived abroad for over a year. It's really great if you live in a country with low income taxes, because it's going to help eliminate, a lot of your US tax burden. But I will call out that, again, this is kind of when you have to think strategy. So if you have children and you want to claim the additional child tax credit, and I'm sorry for anyone that doesn't have children, it's like, can you please stop talking? Maybe I'm a parent now, so I get it, but bear with me. So if you have children, you might want to think about not using that so you can get the additional child tax credit. Now, if you want to contribute to your US individual retirement accounts or IRA, for those that don't know, you're probably going to Google IRA after this, and I'm curious to what you'll find. But, if you want to contribute to your US IRA, It's actually pretty hard to do that with a foreign earned income exclusion because you need to have enough taxable compensation in order to contribute to your US IRA. So an example here, and we're actually going to have a really nice kind of YouTube video coming out later that describes this a bit more, but if you want to contribute to your individual retirement account, right, a traditional or a Roth IRA, because you want to save up for retirement in addition to whatever pension you may have locally, and say you are, making 100K abroad from salary and then use the foreign earned income exclusion to exclude that 100K, well, now you don't have any taxable compensation, so you actually cannot even contribute to your IRA. So that's something to keep in mind. And if you do use the form 2555 and you revoke it, you can't use it for 5 years. So it's kind of like once you start, it gets a little bit hard to switch around. So regardless, that kind of comes to the next expat tax benefit, which is the foreign tax credit. And that's using income taxes paid abroad to offset US taxes owed. So every single euro you pay, every single Canadian dollar you pay, every single pound you pay to the UK, you can claim as a foreign tax credit on your US tax return. Now, this form is pretty difficult to use, 1116, because there's so many different versions of this form. So there's different categories. So there's general and there's passive and there's resource by treaty and there's foreign branch. Basically for 1116, general is income like salary, right? Then you have foreign branch if you have self-employment and you're based abroad, because that now falls into foreign branch category income. And then you have investment income or rental income. So basically passive income. So hence the passive bucket. And then you have resource by treaty in the sense where, okay, you worked in the US or you have some type of US source income, and then you're claiming foreign tax credits on it. So you're resourcing it by treaty. So there's multiple buckets. And then on top of that, you have to do kind of a regular version of it and then an alternative minimum tax version of it, which is why if you use MyExpatTaxes, you'll see so many versions of this form with AMT on it. And that's just what it means. It's required to do these background calculations. So it is kind of difficult to use, a lot of math involved, but the pros is, to echo myself once more, you can claim the additional child tax credit and it provides you taxable compensation. So in this situation I just talked about, you make 100K abroad, you decide not to use the foreign earned income exclusion, you now have 100K of taxable compensation, but you can use, your 30K of foreign income taxes paid on that 100K to wipe out your entire US tax burden, but still be able to contribute to a US IRA. So it is good too because you have carryover credits. So whatever you don't use, you carry over for 10 years, which I think is very useful because maybe one day you get a pension payment and you don't necessarily pay that much income tax on it, but then you have carryover credits that you can use on it. So that's why we do usually recommend 1116 if we can do that, right? Unless the foreign income exclusion really makes sense for you, we will normally opt for the foreign tax credit just because there's so many benefits, and especially with the carryovers of credits that can help your expat situation. Now, the last one is the tax treaty, right? As I talked about, a lot of countries have tax treaties with the US, and most of them will exclude Social Security benefits. So if you have some type of Social Security benefits, it's not necessarily the ones you get from the US, but some type of Social Security payment you get, essentially any government funded payment you get locally, right? Whether that's for family benefits or unemployment or et cetera. If it's government funded, it usually falls into the category of public kind of benefits to you. And that means Social Security benefits. That's usually excludable via tax treaty. So, it's not earned income because it's, say, Social Security, so you can't use the foreign earned income exclusion. You don't pay tax probably on a government payment because why would they ask you to pay tax on it? I mean, the US does, but that's a different story. But most countries don't ask for tax on their own payments to you. You're kind of stuck. How do you claim this? Well, then you claim it with a tax treaty so that you don't get taxed on it by the US. So that is the other benefit you will see. And it is pretty difficult because obviously you have to read the tax treaty, you have to understand the tax treaty, and then they make the tax treaty even more complex because obviously there's the tax treaty. But what you need to read is the fine print of the tax treaty, which is called the savings clause. And if you look for the term savings clause in any single tax treaty, it basically tells you if you're a US citizen, it's like this treaty never existed, except for paragraphs 1, 2, and 3, etc. So if that didn't make any sense, it's because it actually really doesn't make any sense, but it's really these US tax treaties that exist. If you're a US citizen, 99% of that treaty does not apply to you. The US still can tax you as much as they want, except for certain paragraphs, and that paragraph usually is regarding Social Security payments. So those are the expat tax benefits. Let's get to FATCA, FBAR, all that fun stuff. So obviously, I probably just stressed you all out with what you have to do on your US tax return, all the things you have to watch out for, the different strategies you can use. That's just one part of it, right? Because then you have to think about, what about your foreign financial account? So FATCA is a US federal law, and essentially it's a double reporting requirement where you go to a bank or you go to any financial institution, they find out you're a US citizen, and they're like, first off, they'll probably be like, I don't want your business, which is really unfortunate. But the ones that say, okay, we'll accept you, will probably give you like a stack of papers to say, okay, tell us your US Social Security number, sign off on the IRS looking into your account, et cetera, et cetera. I'm sure you went through that process because I do. I still get emails from my bank like every year asking me to re-sign these consent forms for the IRS, which is whatever. That's just part of being an expat, right? But regardless, the financial institution will have to report your, any US related clients' information to the US Treasury. And then you have to also report that information. So yes, they already have it somewhere in a database, but they want you to also report it, right? So they also want you to report it and then put it on either an FBAR or a Form 8938. So that's basically what you see on the screen is, when do you actually have to file FATCA forms? What are FATCA forms? They come down to two different forms. The FBAR is kind of the first threshold. So if you have a maximum balance combined from all your different foreign financial accounts of over 10,000 US dollars, you have to file an FBAR, and that's Form 114. And that form does not go to the IRS, that goes to the US Treasury. So that's something that's important. You cannot paper mail this form, you have to electronically file it. So we do include this in your tax package with MyExpatTaxes, so it goes to the right place. I also saw someone had a really funny comment about vodka and wine and a coupon code. There is a coupon code, so just bear with me. Let me go through a little bit more, and I'll get to that. But then if you have then over about $200,000 is kind of where I say the threshold is, right, to be safe, then you have to file Form 8938, which goes into your US tax return. So the threshold actually is a little bit different. So it's $200,000 to $300,000, depending on kind of how much was in your accounts on the last day of the year or what's the average. But to keep it simple, let's just say if you have a combined max of over 200,000 US dollars, you should probably be looking to file this Form 4830 or 8938 in your US tax package. And obviously, if you're married filing jointly, all the threshold amounts are doubled. But this is in your US tax package filed to the IRS. But it sounds like a lot. It's actually not, because if you're filing the FBAR, the Form 8938 is essentially just a very large version of the FBAR. I mean, there's a couple additional questions, but it's the same information. And there is no tax calculated on these forms. It's purely informational. So it's pretty straightforward. The main thing you just need to know is, where's your account located? What's your account number? I think you probably know that information. And the hardest part is, what's your maximum balance, right? So that is a little bit tougher, but the maximum is kind of the tricky part, right? Because otherwise the FBAR and the FATCA forms, they're easy, right? Where's your account located? What's the account number? Who do you own it with? I mean, it's a little intrusive, don't get me wrong, but it's easy. But it's the calculating your max. So I know a lot of people are get confused on this. I hope this very simple, explanation helps. You have 3 bank accounts, you have some in the US, some in the UK. You ignore your US accounts. It doesn't matter about your US accounts, right? We're talking about your foreign financial accounts. Foreign financial accounts, bank accounts, pension accounts with a cash value. So you have a pension account with your employer. I'm pretty sure every single year you get a letter from that financial institution about how much is in your pension. Keep those letters, right? Investment accounts that are abroad. So, these things. The gray area here, which we get the questions all the time, is, what if I have a TransferWise account? What if I have a PayPal account? What if, basically an online bank account or online money account, so to say, or I have cryptocurrency. So generally, we would say, hey, if the company that you're going through is normally located abroad, we would include it to be conservative. I mean, it's a lot of back and forth, and in most situations, you may not need to. But if you're already going to fill out the FBAR, you might as well just include it to make sure all your bases are covered. at this point. But regardless, you ignore any US accounts. You only focus on the foreign-based ones, right? Foreign in this meaning not US. You would calculate the maximum, not the ending balance, not the average balance, the maximum balance in the year for all accounts. Keeping in mind, you also have to include those with your signature authority. So if you're signing for an account through your company, if you have signature authority for your spouse's accounts, if you have signature authority for your children's accounts, those also have to be included. So you would calculate the maximum balance. And, banks are getting a little bit easier with this. So for, one example, I look at my online bank account, I can see per month kind of what's the monthly balances and even the highest kind of amount in there. But I would say if you can't pinpoint the exact maximum, look at the monthly statements as long as you tried is what I like to say, right? Obviously try a little bit. Don't just guess and that guess is totally off, but do try. And the IRS does have this information. So if as long as it's not completely off, like you had 100K and you report you only had 10K in it, I think you're fine, right? As long as you're in the ballpark. So don't worry about getting every single penny. Don't stress yourself out about that. But calculate the maximum balance and add it up. So if your UK bank account number one had a max balance of 5K pounds on January 1st, that's the amount that you're taking for bank account one. Now your UK bank account number two had a max balance of 6K on December 31st. I know those are different dates, but that's the max balances. So you would take max balance from bank one plus max balance from bank two, regardless of whatever day it was on. You would add them together. You would convert it to USD. And if you're over 10,000 US dollars, file an FBAR. If you're unsure if you have to file an FBAR, file an FBAR. Why? Because there's a $10,000 penalty if you don't file an FBAR. Not that people have really enforced it, and that the IRS doesn't really enforce it. But if they do start enforcing it, you don't want to be on that side, right? So just file an FBAR if you're unsure. We make it super easy to do so. I have probably filled your head with so much information at this point. Thanks for watching our webinar. We hope to help you feel more confident about filing your US expat taxes. MyExpatTaxes is the leading US expat tax software and will make your filing experience a lot easier and smoother, as it should. So check us out, and if you have any questions, you can always reach us in the live chat in the app or via email at team@myexpattaxes.com. Happy filing!